What is up, guys? All right, so in this video, we're going to be going over possibly the holy grail of entry purposes. We're going to be going over what Fibonacci's are. This is probably going to be a two-part series, in all honesty. We're going to be going over basic Fibonacci, Fibonacci extensions, and Fibonacci sequence, something that I use to get maximum entries and perfect entries inside the market. Okay, so I'm going to be going over what Fibonacci's are. I'm also going to be going over what fib levels I personally use to get inside the market. Okay, so first things first, what is Fibonacci? So Fibonacci was a person. I doubt that he traded Forex, but this is Fibonacci is a scientist or some mathematician that basically designed like an algorithm that everything in life retraces to a point of levels before it continues to go in the direction it's supposed to go towards. This applies to everything in life, but this specifically applies to Forex and how we trade. All right, so Fibonacci extension levels or retracement levels are levels in the market that act as support and resistance. So these are support and resistance levels, and they basically gauge where price is going to retrace to before it continues going up. So when we have an uptrend, we understand that price needs to retrace. Why? Because it reaches a level of resistance that it doesn't have enough momentum to break. So it retraces and it keeps going up, and then retraces again, and then continues to go up, and then retraces again, and then continues to go up. You understand? So basically, what FIBS use is a tool that we use to measure from here to here how much is price going to retrace based off this leg before it continues to go up. So it gives you an idea of when to enter for another buy or when to close your sell if you did sell. But it just gives you a good entry purpose on how much price is going to retrace before it continues to continue its uptrend or downtrend. Okay, so again, when we're pushing, we understand that price reaches a level of resistance, so it needs to retrace. So this tool is a tool that measures from point A to point B from the impulse leg. This is called an impulse leg. From the impulse leg, sorry guys, hold on. From the impulse leg, how much is price going to retrace before it continues to go towards the top side? All right, so now I'm going to show you my fib levels, copy them down so you guys can see them. So these are, I don't know where it has it like that. This is just the new way that it has it. So these are my fib levels. The ones really just copy the check marks and the color and the percentages. All right, so these are the fib levels that I use when it comes to trading in the Forex market. And now you could have it on the left side, the middle. I like to show percentages and price as well. So I like to see exactly what it shows and the current price point that it's at. So it gives me an idea of when to place buy limits and stuff like that. So let's say I wanted to enter off of 38%. I'll place a buy limit at 142.250 or something like that, or 142.200. You know, just gives me an idea of where price wants to go towards. So now the main thing when it comes to these retracement levels, think of a slingshot or a rubber band. The further you pull, the farther it goes. At the same time, if you pull it too far, it breaks. So there's certain levels in the fib level that if it passes it, it's going to reverse the trend. You know, the main levels that we're looking at are going to be 61.8, which I call it 62%, and 38.2, and fib level 38.2, which I call 39%. I call them those levels just because of preference. They don't do anything, they don't mean anything. It's just preference. That's just what I like to call them. I like to say it's 39%. I like to say 62%. Same thing, 78.6. I like to call it 79%. It's just preference, what I like to call it. Okay, you can leave it at 38.2 or 61.8. I like to say it's 39 and 62. The colors are your discretion as well. So again, think of a slingshot. The further you pull it back, the further it's going to continue to go up. The two main levels in the market that we're going to be looking at all times are going to be 39% and 62%. There's other fill levels in here. Some people use like 22.6. Some people use 50%. So right here, there's a 50% mark, but you can have it if you want. Just go to your fib level and put it. But I like, it's obvious. If it goes between 39% and 62%, I know it's hitting 50%. So I don't necessarily need to have it. But it shows you where price is going to go. It also tells you TP levels in the market. Okay? So think about it like this. If you're buying, the first TP is always going to be 0% because that was the previous high. We understand this. Negative 27% is your TP2. Negative 61.8 is your TP3. Typically, price always goes to TP2, which is negative 20%, negative 27%. That is where we are going to be holding our trades. I rarely ever hold my trades to 61.8. Why? Because, again, I'm trading on daily in H4. Any one of these pushes are worth 100 pips. It does not matter. Or not 100 pips, but a good amount of pips at least. You understand? A good amount of pips. It's more than 30 pips. 30 pips is what I typically go for on a daily average. 30 pips a day would change your life. 30 pips on a standard is $300. So as long as I catch 30 pips, I'm okay. That's more than enough pips to continue on with my day. So again, when it comes back to this, we're looking for price to retrace, and it shows us how much it's going to retrace before it continues to go up. So I'm going to show you exact examples of what I'm talking about so you can see it. So it's like this. If measuring for a buy, low to high. If measuring for a sell, high to low. Okay? So if measuring for a buy, low to high. If measuring for a sell, high to low. So let's see. Well, you can place them anywhere. You can plot them in any. Well, again, you can plot them anywhere you want to plot them. Let's say you wanted to plot it from here to here. If measuring for a buy, low to high, and you do it based off the push. So you do it from the lowest wick to the highest wick, from wick to wick of the push. So what I mean by that is this. You see how there's a bearish candle here, but you see how it doesn't really break the trend? Right here is when price really starts to retrace. So we would do it from here, since this is when price really starts to retrace in the market. And as you can see, price came down to 61.8 or 62%, bought towards negative 61.8, TP3. It completely broke it. And you can find these on any time frame. So I'm going to show you on different time frames so you guys can see it. Right here. So you can do fibs different ways. So here we see that price broke out. We clearly see that price broke out of that trend line. It broke structure, and now it was buying at that price point. So now we have this big bullish push. So now we want to know how much is price going to retrace before it continues to go up. I would do fibs from if measuring for a buy, low to high. You can also do it from here if you choose to, but again, you see how that's not a bearish candle. It didn't really retrace. It just continued to go up. So this would be the proper point. If you did it from here, it's still relative. It just went to 62%. If you did it from the actual push, which is down here, wick to wick, it retraced at 39%, which lines up with a few things. It lines up with what? It lines up with resistance turn support. Number one, it also lines up with our EMAs to push towards the top side. And where did it go towards? TP2. Let's say you entered this. That is 97 pips you would have capitalized off of. Very easy. And all you have to do is be patient. It broke, retested, and shot towards the top side. Now, let's say you do fibs again. You can do them on downtrends. You can do them on uptrends. It honestly does not matter. You can do it on any trend you want. Let's pick another chart. Let's try this one. Let's do gold really, really fast so you guys can see it. So on gold, let's say we did it from this push to this push before we caught that buy. So if measuring for a buy, low to high, price came down to these lows, came down to level support and bought towards it reached negative 27. And then price just acted as a level of support right on that 39%. Again, fib levels are support and resistance levels in the market. They act as both support and resistance levels in the market. So they're good ideas of where price is going to push towards, regardless. You know, let's take a look at another pair. Hold on. Let's do USD JPY. So check this out. Right here's another idea of what price can possibly do. I'm going to show you right now what price can possibly do. So I'm going to show you a little bit of confluence. First things first, what type of candle is that? It is a shooting star. You guys should have went over the phases. What did price do? Price just came to fill the wick. So now we know price wants to continue to push towards the downside. Besides that, if we go to the H4 time frame, what do we see? What type of trend line? Ta-da, we see a trend line forming. Since we see a trend line forming, we know that price wants to push towards this area. It already hit it. And now we take out the fib. If measuring for a buy, low to high. If measuring for a sell, high to low. Price is at 62%, which is also a support turn to resistance level to continue its downtrend. Exactly. That is a simple move, guys. Simple move to continue to push towards the downside. This is what I see. I see price continue to go. So this is a move that I would like to see, and I see it dropping about 100 pips, honestly. I think it's going to continue all the way towards the downside to the previous lows. But that's a fib level. This would be a perfect entry. This is a fib design level based off of what I see in the market, like a live fib. Let me see if I can find another one that's that already formed so you guys could understand a little bit better. So again, the most important parts when it comes to fibs is just understand this. If measuring for a buy, low to high. If measuring for a sell, high to low. 38.2 and 61.8 or 62% are the go-to zones. Negative 27 is your TP2. 0% is your TP1. Why? Because price always moves to support resistance. So if you're buying, price is going to go to its resistance level. If you're selling, price is going to push down to its support level. It's a good area where price wants to go. And you can use them on any time frame, guys. Any time frame you could use them. It does not matter what time frame you use them. You can use them on any single time frame. Honestly speaking, whatever time frame works, fine. So think about it like this. So first things first, we have this massive hammer. That's a confirmation. So we know price wants to push towards the top side. Besides that, we're at this price point now. So we have massive bullish push, right? And now we go to a smaller time frame to see where we're at. So what did we do? If measuring for a buy, low to high. I would have done it from here. Why? Because as you could see, price already came up and then retraced and then continued to go up. So it came up, retraced, continued to go up, retrace, continue to go up. You can do it from there, or if you want to do it based off the daily time frame, which you can as well, you just do it if measuring for a buy, low to high, because that's when it really starts to retrace off the daily time frame. And what do we see? Price came down to negative or 62%, and now it wants to push up. So where's our TP level? First TP would be negative 27, which if we look at it, lines up with the previous highs. Next TP level is going to be negative 61.8, which if we look at it, lines up to the previous highs as well. So these are TP levels where I want price to go towards. These are exact TP levels where I see price pushing towards the top side. Both these levels are zones that I want to see price go. I want to see price hit both of these levels to push towards the top side. And just confirmations. What are the confirmations? Think about it. Fib level, 62%. Price is at a low point in the market. Price has massive rejection on this time frame to continue just to push up towards the top side. Massive trade, guys. So this is another example of fibs. Okay, this is basic fibs. Just understanding 38.2, 61.8, negative 27. Just based off this, you can guys trade. Imagine you see your retracement. Now, imagine you're on a massive uptrend and you see your retracement and price goes towards 61.8 and then forms a hammer. You see? Now, let's say you're at this price point and you see this candle. Price is probably going to come back down, but let's say this forms like a double bottom. Let's say it comes down here and forms a double bottom. That's another exact precise entry to then push towards the top side. Clean money entry, right? So that's what we're looking at. That's exactly what we're looking to see. So this is a beginner fib video, guys. I hope you guys enjoyed it. I'm going to make at least 1 to 2 more videos on fibs covering it. This is basic fibs. Again, fibs are support and resistance levels. So these act as support resistance levels. Do not ask me why do they line up. I don't understand why they line up so perfectly fine. But as long as you do, if measuring for a buy, low to high, if measuring for a sell, high to low, put my fib levels that I have here inputted into the system, you'll be able to catch massive pushes inside the market, massive great entries and wick entries. You'll have zones. So let's say you had this mapped out already. As soon as price pushed down here, you could have already bought because price entered your price zone. Before it reacted as a candle, you could have bought, been up 20 pips, 15 pips, 10 pips, whatever the case may be, but you would have been up a good amount of pips. All right, guys, I'm going to make, again, a part 2 and a part 3 when it comes to fibs. All right, guys, thank you so much.